Hello, hello, everyone. You're back on another live show. You're with me, Olivia Higgins. Welcome to FinTech Month. Now, it's exciting here in Singapore where we're broadcasting from. We've got the Singapore FinTech Festival ongoing right now this week. And we've got a lot of other events around the region that are covering FinTech topics. And yes, it is a hot topic because we're trying to figure out what kind of opportunities can we look out for going forward into 2023? Can you believe it? It's already the end of the year. So right now, today, kicking off the first show, I've got an expert just for you. We've put together this show so that we can start the conversation and open the discussion for, what are these investment opportunities we're talking about? And let's really drill it down to Southeast Asia for today. So while we wait for a few more people to come in, once again, I'd like to remind you that we're here as an educational forum, a bridge to all these experts and analysis, and we value your learning journey. And we're so happy and grateful that you're always with us on these live shows, following us on our offline events and really, really trying to equip yourself with the right knowledge. And at the end of the day, it's really about a self-directed journey. Investment is personal. And, at times we are always looking for the next best opportunity. So we are here doing this show just for you so that we can educate you to make better investment decisions. Now, today we're diving straight into the future of FinTech in Southeast Asia, where to invest right now. We'll explore possible investment opportunities in the mega FinTech trends going into 2023. And also, I think this is quite important, how Singapore as a regional hub and its status, how can we actually elevate that in terms of progression compared to the other rising stars in the FinTech space, not just in Singapore, but around Southeast Asia. So with that topic, let us welcome the CEO and founder of Beansprout, Gerald Wong. Hi, Gerald.
Hi, Olivia. Thanks so much for having me on the show today.
Hi, yes, thank you so much for coming on. I always value our conversations offline. And for the audience out there, I think some of them have seen you around, not just, on your Instagram pages and stuff, but also in our previous Fight Inflation talk, right? Where we had it at the co-working space. Now, they really enjoyed that. So we're really glad to have you here. But for those of you who don't know about Gerald, maybe Gerald, you can tell them a little bit more about yourself.
Sure. So my name is Gerald. I'm the founder and CEO of Beansprout. We just started this year and we share a similar objective, like why we are doing the show today, to be able to help you make better investment decisions. We believe that learning is a very important component to that. So hopefully with the sharing today, we are able to provide you with some insights around the fintech space within the region and inform your next investment decision. At Beansprout, we run a platform, growbeansprout.com. Feel free to visit the site where you'll be able to get more interesting content around different topics, the Fed rate hike that we saw yesterday, as well as other themes that might be of interest to retail investors, or in the name of this learning journey that we hope to be able to go along with you.
Right. So let's dive straight into the topic. Now, FinTech. Maybe we could start with defining that in terms of the context right now in these current markets.
So I think if I were to look at FinTech, it is really a combination of finance and technology. It is probably not something that is new, depending on what time period that you're looking at.
Right.
But I think over the past few years, we have actually seen an acceleration across many different aspects of this FinTech development. One area would actually be in terms of funding. So if you look at the funding of FinTech, that has actually increased over the last few years as people actually realize the opportunities that come through with the FinTech sector. The other areas would actually be in a few other spaces. One, we have also seen wider access towards some of these FinTech services. It is now something that a lot of the consumers in Southeast Asia actually have exposure to, because in the past, when you want to be accessing some of these services, you actually need to do it on a desktop computer. But with the proliferation of mobile devices, that has actually also helped to increase the adoption of some of these fintech services. And then when I'm looking at the development of companies in itself, we have seen also a lot of innovation that has come through within the fintech space, such that it is something that is available to a lot of consumers within the region.
Right. Thanks for setting the context. Now, when I think of fintech, it's no longer just, one finance company or, a tech company, which, we hear a lot about. It's pretty saturated right now. But in fintech, it's multidimensional. So with this aspect, would you say that's a strength? And why? Why should we invest in fintech in the first place or start looking?
Okay, I think if we were to look at the overall industry backdrop, the key reason why a lot of investors are interested in the fintech space is because that would allow investors some exposure to the growth in wealth amongst consumers within the region. We are speaking as the FinTech Festival is actually happening. There was a big report that was put out yesterday, jointly by Google as well as Temasek, that actually shares some of this growth that we have seen across various technology verticals, as well as the fintech space over the past few years, as well as looking forward towards the future. And I think that is where a lot of the interest in fintech actually comes through, because when we look at the digital financial services, it is expected to grow somewhere between 10 to 30%, depending on which subsegment that you're looking at, over the next few years through to 2025. So it isn't often that you see a lot of industries growing at that pace. And I think it is really this significant growth that we are looking at over the next few years that has attracted a lot of investor attention.
Right. Several reports have come out from, just the Singapore FinTech Festival, and there's so much analysis as well that has come up from that. So, maybe we could go into some examples of the subsectors that you were talking about, and let's relate that, Gerald, to the macro trends that we can explore going forward into 2023.
Yep. So if we were to look at some of these individual subsegments within digital financial services, one big component would actually be within the wealth tech space within fintech. So how would the growing amount of wealth that consumers have within the region can potentially be tapped because of various technologies that have come through. This can be in the form of digital brokerages. This can be in the form of robo-advisors. So many different aspects of this wealth technology space. And this is actually the component that is expected to grow the most significantly over the next few years, as a result of the macro trend towards greater wealth creation within the region, as well as more of this actually shifting towards digital tools. Okay, so that is the area that we are most interested in, because of the fact that it is the area that is expected to grow the most over the next few years. One other subsegment that maybe a lot of us would be familiar with would be in the digital payment space.
Yes.
So it is an area that you would have a day-to-day usage towards, like when we go out and buy something. Nowadays, even a lot of the hawker centers, coffee shops also allow digital payments. It can be in the form of remittances if you are looking to transfer between different countries or different wallets. And now with the reopening, a lot of people are traveling. We may not actually want to be going down to the money changer anymore to be doing the physical cash exchange. A lot of it can actually be done through some of these digital wallets that are being set up. So that is one space that's seen a lot of growth in the last few years. And that is why each of us probably have a few digital wallets sitting in our mobile phone. But compared to the wealth management space, if we were to look ahead, that subsegment is still growing, but maybe not growing as fast compared to the wealth space. Overall, we are still looking at that space being able to grow at more than 10% per annum over the next 5 years, such that it is still a significant driver of the growth of the entire fintech space.
You're right, Gerald. I mean, even for myself, everything I do is on my phone. I don't
Yes.
even carry a wallet anymore. They're like, "Do you have cash?" No, I don't. I just pay with my watch. But with the wealth management side, right? There's a lot of news in the past few weeks about how Singapore is experiencing that boom of family offices and the amount of volume of capital and also investments coming in is quite significant, especially in the real estate space. But then on the other side today, I just read that, people are, setting up apps for the management of family offices and all these niche sectors or subsectors in Singapore that you can tap onto. Is there anything else that we can cover or at least explore in terms of investment opportunities in this space?
Yeah, so I mentioned earlier that the digital wealth space is expected to grow between 10 to 30% over the next few years to 2025. And the reason there is such a range is because it really depends on which are the subsegments that we are looking at within this digital wealth space. And I think one of the examples that you listed, which would be in the family office space, I think that caters more to accredited investors, as we have more of the ultra rich actually being based in Singapore. That has actually helped to drive the acceleration of wealth technology catered towards that subsegment. We can also look at one other segment, which is the retail investor market. So that is an interesting space as well, in that with the general wealth creation that we have seen for the larger population, as well as the increasing accessibility of a lot of the technology, the lower fees that some of them have to incur when doing some of their investment, that has also driven a lot of adoption of fintech solutions within the retail investor space. So each of this being driven by different factors, but I think the overall driver of the increasing adoption of fintech across the region can potentially be attributed to the fact that number one, you have got greater accessibility. Number two, you have got more solutions coming into the market. And if you're looking at it from a Singapore context, the regulatory framework is conducive because the MES has come in to provide a lot of support of the development of the fintech space. And then at the same time, you've got a very strong ecosystem supporting all of these companies.
Absolutely. That idea of accessibility, and that's where the tech comes in, right? To make that happen as a platform. Well, this morning I just spoke to my friend in Hong Kong just to catch up, and he was telling me how, we're both having our FinTech weeks ongoing together. And he's like, there's some kind of competition there. But overall, I think a lot of, the world is looking at Singapore right now, and Hong Kong, of course, but they're looking at, the transactions, the money coming in, and the amount of activities ongoing right now. We had F1, we had Token 2049, we had so many things ongoing, and still. So, as Singapore as a regional hub in this space, what could you tell me about that? And what are your insights for Singapore?
Okay, so we touched briefly on the topic of Singapore as being well positioned in the development of the fintech industry earlier. And I think the fintech festival that is now ongoing, creating a lot of buzz, is probably one of the ways that this is being reflected. There are several reasons why Singapore is well positioned to be able to tap on this growth. The very conducive regulatory framework will probably be one of the key reasons, because at the end of the day, it deals with financial products, and having the kind of framework that allows investment certainty, allow investors to know what they are actually in for when they invest into this sector, provides a very strong framework for attracting investment in this space. The other area would be, because we are looking at fintech, and established financial industry is something that would naturally help in the overall fintech development. So I think that is where, because there's already a very developed ecosystem around the financial services space, it can be in the form of capital markets, the stocks and shares that we are dealing with. It can be in the private banking space, where there are a lot of companies that are helping high net worth individuals to actually make better wealth decisions. So because the financial services space is already something that is well developed in Singapore, we have got an ecosystem around that in terms of the legal services, the ancillary services. So when we are thinking about how this can then be adapted into the fintech space, it becomes something that can actually be grown into in an adjacent basis.
Thanks for sharing that. Very comprehensive. Now, in terms of your insights coming from Beansprout's research, right? The previous time when we had the offline event, a lot of people came up to me and said, Gerald was so good at, really highlighting the macro strategy for, fighting inflation, for example. So, now that markets are still uncertain, right? What are some of Beansprout's insights towards this in terms of investing right now in this market, I guess, downside or uncertainty?
Yeah, so I think I will touch on something that is very topical and what everyone has been talking about, asking us on today, which is the interest rate increases that we have seen over the past few months. The US Federal Reserve increased the benchmark interest rates by another 0.75 percentage point last night. So that is actually the fourth consecutive increase that we have seen of 0.75 percentage point, and would actually bring the benchmark rate to close to 4%. So interest rate is something that a lot of people have been talking about. It is content that we have written about on our platform as well, and has drawn a lot of questions and discussion. But that will probably remain one of the key drivers of the market as we look into the remaining months of 2022 and into 2023. So apart from the 0.75 percentage point increase in interest rate, one of the key messages that the US Federal Reserve has actually come up with would be the comments that what we are looking at is potentially a slowdown in the increase in interest rates, but we are actually looking at a higher level of peak interest rate. So that was probably the point that a lot of investors were taken aback by because of the fact that we are already looking at interest rates that are close to 4%, and we might be looking at an even higher peak interest rate.
Right.
So that is not what investors want to hear, especially if you're invested in the equity market, because that might mean that there might be investment opportunities with better risk reward if you were looking at other asset classes. So I think that is one area that a lot of investors look at and continue to be looking out for in terms of whether we'll start to see a slowdown in the interest rate increases and how that actually affects how we would invest across different asset classes.
Of course. Yeah. So you talked about the Asian equity space. I know I've already got a lot of questions coming in for you, but we'll leave that for the end. Keep it coming to the audience out there. But Gerald, I think really, in terms of, trying to seek out opportunities, I think the fintech space is quite broad, and I understand Singapore is gaining a lot of traction with that. But, wouldn't you say, or what is your opinion on this, it being, also a volatile space, because, there are a lot of entrances, a lot of exits, you're talking about rising stars 1 minute, and then, these fail at the same time. So, how can we make sure that we are, I guess, putting our money in the right place, or at least when we're making a decision of where to invest within fintech?
Okay, so I think you're right to mention that because it is an industry that is still growing, so that naturally comes with a lot of uncertainty around which might be the potential winners or losers.
Right.
So while we shared about the very significant long-term structural growth trends, in the near term, you might actually continue to see volatility. And this volatility is actually being accentuated because of the interest rate movements that we discussed, that would actually affect some of these growth companies more than the others. So you actually have got this very positive long-term trend, but then at the same time, potentially some near-term volatility. So actually, the way to actually think about this is number one, always do your analysis, because what we want to be investing in would be companies with strong fundamentals. They have the balance sheet to be able to go through this, I would say, near-term uncertainty in the market. We are not too concerned about how much cash they're actually burning, and that they can survive this downturn, whether is it for 6 months, 12 months, or even 2 years.
Mhm.
So I think that is also one of our key philosophy at Beansprout around providing you with the insights to make better investment decisions. And I think that is also why we are on this show today, to be
Absolutely.
able to share some of these insights that might potentially help you with some of your investment decisions.
Thank you for sharing that. Yeah, I think those are really important concerns and very real ones as well, even for me personally. And I think it's always about trying to seek opportunity amidst the crisis. And I do want to go back to, maybe just the rising stars within the region. So we've covered Singapore, but then what about, the developing countries, like, for example, you're talking about Vietnam, and there's a lot of news on that as well about rising stars within that space. So, what about our relationship of Singapore and, the surrounding ASEAN countries?
So I think you're right to mention that while we are seated in the middle of all of this, there are also interesting opportunities from some of the other regional markets. Vietnam, like you mentioned, would be one of them, and the other one that a lot of investors look at would be Indonesia. So we mentioned one of the key drivers of the fintech industry growth is because of the growing wealth creation that we see across the different economies. Vietnam and Indonesia would probably be good examples of how that is actually happening. You have a growing middle class that is able to find gainful employment and hence growing their wealth. And when they grow their wealth, they have to find avenues to be able to invest this wealth that they are creating. You've got a very young and energetic workforce, and that is generally seen to be a good long-term driver, because it would mean that we are only starting to see some of this initial growth in their wealth creation. And as they continue to grow over the next 10 years, 20 years, that is something that can potentially drive more significant growth in their wealth, as well as the adoption of the wealth technology solutions. Singapore is able to benefit through this as well, because for a lot of the fintech solutions, we not only target the domestic market, but also some of the other regional markets as well. So using Beansprout as an example, we also have audiences who come to our site from other regional markets such as Malaysia. So that is something that we are seeing at this point in time, and will potentially just continue to grow as the integration of these different markets actually take place, and that we are able to see this long-term growth of the entire fintech space within the region.
Yeah, I'm glad you mentioned that, because Indonesia is also a market that people commonly talk about, but they don't really necessarily talk about it in terms of like it being hot for investment opportunities directly. They're always talking about Singapore, Hong Kong, but I'm glad that now the conversation is broadening and that we're looking at Southeast Asia as a whole. So thank you for covering that. Now, let's go even more macro. What is that global outlook we're looking at for 2023? And for time horizon, let's look at it for the next year.
Okay. So I mentioned briefly about this increase in interest rates that we have seen over the past few months. That has been one of the key drivers of global markets globally. Because when the US starts increasing its interest rates, it would have repercussions across financial markets in different parts of the world. One example of that would be if we were to just look at the trading of regional currencies. If you look at, say, the Malaysian ringgit, if you look at the Japanese yen, the Korean won, we have seen weaknesses in these currencies. partly because of the fact that the US has been raising interest rates. So a lot of the capital flows is now moving back into the US from some of these regional markets that might have seen some of these inflows in the past. So the interest rate outlook is still something that we are looking out very closely for. And I think if we were to look at what the Fed has actually said overnight, there's good news and bad news. The good news is that we have seen 4 consecutive increases of 0.75 percentage points. That is actually very aggressive, because what this means is that it is a 3 percentage points increase in interest rates over the past few months. You have seen that being reflected in the kind of mortgage that you are paying for. It would have been reflected in some of the other investment products that we see in the market as well. So the good news here is that effectively the pace of increase is going to slow down into 2023. That is something that the Fed has actually indicated, in that maybe we'll not see another 4 consecutive increases of 0.75 percentage points. And that is generally seen as good news. But the bad news here is that compared to what the market is expecting, we might still see a higher level of peak interest rate. Previously, the Fed was expecting that, okay, maybe the interest rates will peak somewhere between 4.5% to 4.75%. So that would represent maybe another 0.5 to 0.75 percentage point compared to the current level. But what Fed Chairman Jerome Powell has suggested is that rather than ending up at those levels, it might potentially end up at a higher level. And what this means is that whether we are looking at the highest level of mortgage rates that we have to pay, how much more Fed rate hikes we are looking at into 2023, that still remains an uncertainty. And that is something that will continue to drive the market going into next year.
Thanks for covering that. Yeah, that hawkish stance is a repeated discussion point in our own communities. And they're sort of like, when is this ever going to end? But I think it's important that we, rationalize it and sort of say, okay, it is what it is right now. How do we best protect and prepare for what's to come, right? Okay, so with what you just highlighted, I guess how I want to end our fireside chat is perhaps maybe you could summarize for me, that relationship between, what we heard with the Fed hikes and FinTech space in terms of how it affects it, and how can we best protect ourselves for investments in this space?
So if we were to look at the macro backdrop of rising interest rates, that would generally be seen as a headwind towards some of these growth companies, because there might be less investment that goes into the space as the cost of capital increases. But thankfully, if we were to look at the Southeast Asian fintech space, we have not seen a very significant decline in terms of total investment. There's still a lot of interest in terms of wanting to find opportunities within the fintech space in Singapore and across the region. Part of it will be driven by a few of the structural trends that we discussed earlier. You have got a sizable population, especially in countries such as in Indonesia. You have got a growing middle class and growing wealth creation across the entire region. And then in selected countries such as in Singapore, you've got a very strong regulatory framework, very good infrastructure to be able to drive the development of startups within the space. So all of it is helping to shield the fintech space from some of the macro trends that we have seen, especially relating to the high interest rates over the past few months, as well as going into 2023.
Thank you so much, Gerald, for that chat. Now, I would like to take some questions from the audience before we round up and summarize further. Now, we've got some questions related to the macro trends that you talked about. So thank you all for your questions. I will just go into my first question. So the first question, what's the long-term growth like of the fintech market in Singapore?
Okay. So I shared some numbers earlier. So if you were to look through 2025, there's a range of numbers given, 10 to 30%. This came through from a very detailed study that Google did together with Temasek and released as a report as part of the FinTech Festival. So it is a resource that's available online. We can look it up. The other interesting trend is that there are differences in terms of the growth rate across the different subsegments. So the interesting space is the wealth tech space, which is expected to see greater adoption and hence stronger growth rates over the next 5 to 10 years. And then if you look at something like payments, where there has already been very significant growth over the last 5 years, then maybe the growth rate would slow down slightly because maybe each of us already have got 3 or 4 digital wallets on our mobile phones, and the potential to be adding another 3 to 4 more would be more limited.
Need to make space on your phone.
Yes.
Yeah, I know it's something that I would love to see, you know, where it's going for the next few years at least. Okay, thanks for answering that. Next question was related to something I asked previously, but someone would like to know, fintech is a huge market. So which specific sector should we be watching right now, or at least what is Beansprout's take on this?
So we strongly believe in the growth of the wealth tech segment. I think putting the growth of the wealth creation that we discussed earlier, I think what also excites us is that there are a lot of different subsegments within this space that we can also be looking at. So the high net worth bracket would be something that a few of the companies within the fintech space is actually excited about, because of the growing wealth that is pouring into Singapore. But for us, the retail investor market is also something that is truly exciting, because we have seen that accessibility is something that is now more readily available. We have got platforms like Moomoo that has brought investing to almost every retail investor in Singapore. The fees are also seen to be relatively lower compared to what has been the case in the past. But there are still very significant opportunities in this space in terms of how we can think about how financial content is being brought across to many investors who are only starting to invest for the first time. There are still many different product and asset classes that are relatively new to retail investors and continue to be very exciting. So just to give an example, I think a lot of investors actually start off with equities because we are all very familiar maybe with Apple stock, or maybe DBS stock, or maybe a REIT that is listed in Singapore. But over the past few months, we have also seen interest in other asset classes. So one example would be, say, fixed income products, because the interest rates are actually growing. So as a result, people are now interested to find out what are the different investment products that they can potentially get exposure to these higher interest rates through. So things like your Singapore savings bonds, your government treasury bills, those are different fixed income products that investors are actually interested in to be able to earn a higher interest rate.
Yes.
Apart from that, you also have got different products that can be, say, funds that are available on the platforms. One of it, as an example, would be, say, the Moomoo Cash Plus. I think investors also want to get a better understanding of what are the underlying funds that they'll be buying into if they were to put money into some of these cash management accounts. How do we decide which are the different funds to be putting our money into? How do we make our money work harder in an inflationary environment? And I think those are topics that continue to be generating a lot of interest as the interest rates continue to go up.
Thank you, Gerald. Next question. Are there any ETFs that I can buy into for the fintech sector? Because that's something I'm favoring right now. I'm a retail investor, so I don't really know how to pick the best fintech stock.
Okay, so this is not financial advice, just on a factual basis, not recommending this ETF as well. From my understanding, given the interest in some of the ETFs by Katie Wood's management company, ARK, she probably has one that is called a ARK-F, which is the FinTech Revolution ETF, where investors would actually be able to get exposure to some of the fintech companies globally. So there is the flagship ETF, which is the ARK-K, but then there is also a ETF that is catered towards the fintech sector.
So that's just an example, right? And I think that's a good question because, people are always looking for techniques and how to strategize. So, what else can you say about, the ETF side and how that can be implemented to hedge during these times?
So I think it was a very good question because there are a lot of investors that may not be familiar with individual companies. And as we discussed earlier, because it is something that we are still seeing the initial stages of growth, so there can be different winners and losers from this development that we are seeing over the next few years. So one of the ways that we can think about investing in the space would be through a ETF, because the fundamentals around the ETF is that it is meant to provide diversified exposure, given that it holds a basket of stocks within that thematic or within that sector. So if you are actually concerned that some companies might actually do better than the other, then a ETF is one of the ways that we can think about investing within the space, because the trend is that there might potentially be growth in the sector over the next 5 to 10 years. But then if we don't want to be spending the time to be analyzing a company strategy, their balance sheet, but we just want to get general exposure to the long-term growth trend, then one of the ways would be actually to do it through an ETF.
Absolutely. And just to recap for the audience, especially those who join in midway, we were talking about, DNA of fintech itself. There are a lot of rising stars and there are also losers in this space, right? But it goes at such a fast rate because of the dynamism that comes with fintech. Am I right, Gerald?
Yes, that's right. So I think if you were to look at the long-term structural growth trends, definitely positive from the increasing adoption of some of these fintech solutions, with the growth of technology that is actually driving innovation within the space, with the greater wealth creation within the financial services space. I think both of them are being brought together to drive the growth in the fintech sector. But then, as we discussed, there may be near-term uncertainty because of the macro backdrop. Interest rates are still going up. There can potentially be winners and losers from this growth in the near term. So one of the ways that we can think about investing would be through a ETF, which provides us with diversified and broad-based exposure.
Thank you for connecting everything. I'm sure the audience really benefited from that. Thank you, Gerald. Okay, next question. We know that fintech is a huge market with excellent prospects, but what are some of the biggest risks that investors like us should watch and pay attention to, Gerald?
So thanks for bringing out the risk question, because I think that reflects the increasing sophistication of a lot of individual investors, in that not only are we thinking about the upside, but also wanting to understand what are the risks that comes through from
risk management.
So very happy to take this question. So I think the risk can come through from several different areas. One of it is regulatory risk. And this is something that is very pertinent today, especially when we are talking about the fintech sector, because I think over the last 12 months, we have actually seen how this regulatory risk has affected some of the companies within the industry. So one example would be, say, the regulatory risk that we have come through from China, and how that's affected certain companies that are based there. Outside of that, even for, say, the companies that are listed in the US, We have also seen the regulatory risk because of the uncertainty as to whether some of these companies could potentially be delisted from the US market. So I brought up the regulatory risk as the foremost risk that we would actually think about because of some of the recent developments that we have seen over the last 12 months that has also affected the share price performance. And I think that goes back to the point around why Singapore has actually done relatively well as a fintech hub because of the regulatory framework that has been established, which is very defined and has given investors the confidence to be wanting to invest in the fintech sector in Singapore. Okay, so I think all of that actually ties in with what we have discussed so far. Apart from the regulatory risk, I think the other risk that we have definitely seen is competitive risk because it is a growing industry. So there are definitely a lot of companies that want to be involved in this growth. A lot of companies that actually want to be able to tap on this growth to be able to bring benefits to their shareholders over the long term. So as an investor, we actually need to understand an individual company strategy, whether they have the management capabilities to be able to drive the company forward, whether they have a sound strategy to be able to tap on some of these long-term growth trends, whether they have the track record to be able to execute on some of the strategies that they have discussed. So that is something that we would bear in mind and evaluate when deciding whether or not to be investing in a particular company or stock. And once again, if unsure and if we want to be just getting diversified exposure, it goes back to the point around a ETF once again, because that allows us to get diversified exposure. Outside of the fintech space, just going back into a general market trend, the market volatility is still fairly sizable at this point in time because of the uncertainty around the Fed interest rate hikes. So that is a market risk that I would still continue to look out very closely for into the remaining months of 2022 and into 2023 to see whether that will continue to affect the valuation of some of these fintech companies.
Now, this is why I love talking to you, Gerald, because you cover all bubbles and you give us that whole macro picture. So thank you for covering all bases with that. And just to recap, you summarized that it's really about the regulation status and how Singapore offers that sort of stability compared to the other markets out there. And also, in terms of even if you're looking at tax rates and just setting up a business in Singapore, it is quite attractive. And I think now, I think people are concerned that maybe it will be too saturated, that it might pose future problems. What are your insights on that?
Okay, so maybe on the point around the regulatory framework, I can elaborate about it myself because I run a fintech company.
Yes.
Apart from the tax rates, I think there are also various incentives that are given that makes it a lot easier for us to be thinking about setting up a business here, being able to hire the right talent, because those are important components as part of the entire ecosystem. For startups to be able to do well, for us to be able to grow and scale together with the growth of the entire fintech space. So I can probably vouch for that in terms of how that has been very helpful for our early development years. On the point about competition, I think competition is definitely there, regardless of what industry, regardless of at what phase you are actually looking at in terms of the growth of the fintech company. And I think that goes back to the fundamentals which are important because I think while we are trying to encourage the growth of the space, while we are trying to pick out which are the potential companies that will benefit from this structural growth trend, we do not want money to be invested in companies that may not be efficient. We do not want actually to be investing in companies that may not actually be having the right product market fit. So I think it goes back to the point about having to do your own analysis to be able to understand which are the companies that have the right management, the right strategy, the right execution to be able to do well within the space. Because the truth of the matter is that it is definitely competitive, but at the same time, it is exciting because for the companies that are able to do well, then there's actually a lot that is available for grabs as the industry continues to grow.
Yeah, good point you brought up there about you being a fintech company yourself. And I've met members of your team myself, and we've had some conversations regarding this space. And I think that's why, you being the first speaker to, be the debut show for our FinTech month is very compatible with what we're trying to align with, which is, providing both insights, but also hearing from someone that has a fintech company himself. And actually, I have just a side question, your company. How did you come up with the name Beansprout?
Okay, so for us, Beansprout is something that is easy to grow.
Yeah.
And I think that probably represents what we think investing should be. So what we want to be able to do is to help individual investors grow their wealth. At the same time, we believe that it should come along with the growth of knowledge. So all along, it is something that should be simple. And that is really what a Beansprout is supposed to represent, in that investing should be something that is simple. While you are investing, you are empowering yourself to grow your knowledge as well. And many of us, through our schooling days, have the experience of growing a Beansprout.
I was just about to say that.
So I think that is what we want.
Classes.
Yes, to actually represent in that investing is something that all of us should be able to do. We already have the different financial platforms that has made investing accessible. But then with the right conditions, all of us should be able to invest well for ourselves. And that is where the knowledge, the insights that we hope to be able to share would actually come in to actually help individual investors make better investment decisions.
Yeah, thanks for sharing that, because I've always wondered what the name really symbolized. And, the first thought I had was, the idea of nurturing, right?
Yes.
You think of the Beansprout being, this nurturing venture for not just yourself, but, as a collective. And of course, having a show like this, we're able to have an open discussion. And that's what, that's why I do what I do as well. It's really about engaging people. And I'm really, really happy and grateful for all your questions out there. So we'll take just a few more before we wrap up. So back to the regulation point, because I always love to talk about this. There's so much to unpack. You're talking about how, for example, in the US and China, you've got, very tight regulation schemes ongoing at the moment. So, with the companies moving over to Singapore for their regional headquarters, and the typical names that I'm talking about in this space, what does that mean for Singapore in terms of its relationship globally, if there is a potential brain drain from the other big countries or the big players?
Yep. Okay, so I think we can look at it from various perspectives. We spoke earlier about how important it is to have a good ecosystem for the fintech industry to be growing. And a very important component around the ecosystem is around talent, because to be able to nurture the right companies, to be able to grow the industry, a big part of it is having the right people in place with the right skill sets, who are able to execute on some of these developments that we see within the fintech industry. So it is definitely positive for Singapore if more of this talent actually land on our shores. I think if I were to look at the industry, say 1 year or 2 years ago, a common thought would be that we actually need more software engineering talent. We need more people who are actually able to do the technological development, because that is a very important part of the development of the fintech space. So the idea is that as the infrastructure continues to develop, if you are able to draw the right talent, then that is something that actually helps us develop as a whole. as more of this talent actually starts to come in. And that also highlights one of the strengths of Singapore as a hub, because of the fact that we are seated in the middle of a lot of these other economies that have got a very ample workforce, becoming increasingly highly skilled. So if you are able to draw some of this talent from some of the other neighboring countries, it would actually be to Singapore's benefit as well. So that is one component on the talent side, which cannot actually be underestimated in terms of the growth of the entire ecosystem. The other point would be more broadly linked to the growth and development of the economy, because as some of these talents start to move into Singapore, it would be generally positive for the growth of the economy. The housing market becomes more buoyant. There is more retail activity as they were to spend, like what we saw during the F1 weekend. So all of it is actually positive for Singapore's long-term economic development. And it goes back to the point around the growing wealth effect, because as the economy continues to grow, there's more wealth being created, and then all of it actually flows back towards the fintech sector as well, as the amount of assets under management continues to grow with the increasing amount of wealth being created.
Yeah, and you mentioned, this talent being drawn to Singapore. I know, recently Singapore actually reviewed the expat package and at least its rules for people to actually live here, right? So there are particular salary components or even particular qualifications that have been tightened, which, understandably, because of the high demand to actually come here. And I think at the end of the day, it's really finding that balance, right, between the two worlds. Well, then, okay, Singapore is a market. Do you think eventually, similar to the internet industry, do you think eventually fintech will become a winner takes it all industry?
Okay, I think we would want to see the development of the fintech industry, and I think all the trends are indicating that there's still significant room to grow over the next 5 to 10 years. But I think what is more useful to think about is that it is not a winners take all kind of competition, but generally it is about being able to tap into a growing pie, because the idea is that as more wealth is actually being created, it should be something that is able to drive more significant growth across the board. I think the other interesting fact is that while we have seen significant growth over the last few years, there's still significant untapped opportunity. If you look at, say, the penetration rate of digital financial services, it is just a small percentage of the overall wealth industry. So that definitely generates a lot of potential to grow over the next 5 to 10 years. And I think what truly excites us is that while the fintech industry is growing, it has a filter down effect to other adjacent industries as well. So say your legal services, your consulting services, all of it is actually going to see higher demand as well as the fintech industry continues to grow.
I think that's a good point there because, fintech is not, like banking, finance, it's tech, right? Where you have the key players that becomes arguably more centralized. But I think for fintech, what is a key characteristic about it is that it's so diversified and just so many needs and wants that you can cater to that perhaps, right, it's harder to be a winner takes all market at the end of the day because, there is a trend now of making it more decentralized in terms of payment. You're looking at, for example, the new economy and the crypto industries, right? What do you think of that?
So decentralization is definitely one of the key trends that we have seen, even outside of the fintech space. We are all talking about, say, a creator economy, especially with the COVID situation over the last few years. That trend has probably accelerated. So it is not just a trend that we see within the fintech space, but I think it is about empowerment of individuals. So across various segments, whether is it in terms of investing, whether is it in terms of creating your own content and being able to monetize it on the web, there are increasing tools and resources that are available right now for this process to be decentralized and for individuals to be able to tap on their network, on their skill sets, on their talent, and be able to monetize it. And I think, once again, going back to the point around investing being something that we are trying to empower people to be able to do by themselves, I think a big part of the whole movement is really around the fact that there are more platforms that are empowering people to be able to do so. Fees have actually come down. And then at the same time, there are more platforms providing these insights, these tools for investors to be able to make informed decisions.
Absolutely. Thank you for that. So the last question, I'm going to combine it with my question because, just to share some background, I would love to know what you think about it as well, because, I grew up with a family of geeks and techies.
Yep.
We built our own PC together. We're a fan of esports and gaming in general, right? And then you've got companies like in Singapore, right, that have the HQ for like Razer, for example, local owned, and also even though he came back from the US to set up the regional headquarters here, they are coming home, right, to Singapore. So now that we have all these, this mini Silicon Valley in Singapore, you've got Shopee, you've got Grab, and gaming companies that are now going into the pay space where they're trying to offer their own type of financial services like Shopee Pay or Razer Pay, right? This diversification I find very fascinating and interesting.
Yep.
So I would love to know, what are your insights on this in terms of investment opportunities? Because I'm sure there are people out there who share similar interests to what I just explained.
So I think you brought up a very interesting point, and it is a development that we have seen actually accelerating over the past few years.
Different marriages of different industries into one.
And I think one key development over the last 12 months would have been the launch of digital banks in Singapore. I think that is a reflection, number one, of firstly, the licenses being given out, and then subsequently through a product development phase, they've been able to come up with their product, which has been launched over the past few months. And the digital banks is probably just one of the areas that we have seen different companies starting to go into the financial services space. Earlier, you also mentioned some of the gaming companies, where apart from selling some of the gaming hardware or even some of the gaming software, financial services is starting to be involved as well. So I think it goes back to the initial point that we started this discussion on, which is that fintech is actually interesting because it combines a few different areas. It is about financial services, but then it is about tech at the same time. And if you think about the confluence of both of them, the application is actually very wide. Because even if I am a company in the delivery space, a company in the ride-hailing space, a company in the gaming space, all of it actually goes back to payments, goes back to financial services, goes back to fintech at the end of the day, because there are monetary transactions that can potentially take place. And I think that is truly what excites us about the fintech space, because there are increasing users of a lot of the innovative technologies that have come up. The opportunities are still very significant, even with the growth that we have seen over the last few years. And the application will just continue to grow as we see more and more of these different adjacent companies starting to branch out into fintech as well. So I think that, yeah.
What is that primary incentive to have that entire ecosystem within, that one company or space? You're talking about even like the metaverse. Someone mentioned you could potentially rob someone's house or bank within the metaverse next time. What do you think of that primary incentive driver?
I think going back to fintech, at the end of the day, it is really about ease of use. And I think that has been something that has helped to drive accessibility, because it is just making people's lives easier. You brought up the example about you no longer having to bring around a wallet when you go out these days. And I think that example is being reflected in a lot of other adjacent services. not only when we are thinking about dining out, but when we are doing our travel, when we are thinking about how do we pay for some of the inboard purchases within the games. These are being facilitated with a lot of the financial services that different companies are beginning to offer. And all of it is really driven by the fact that it is becoming more accessible, and it is helping to make consumers' decisions a lot easier, helping to make their day-to-day lives a lot easier. So I think it all comes back to the fact that we do see a positive impact to consumers' lives through all of the innovation that's come through in the fintech space. And at the end of the day, that is helping to drive wider adoption, and that is driving all the opportunities within the space.
Yes, the idea of seamlessness, right? Just not even thinking about it, and it's just integrated into your life. Yeah, thank you for sharing that. And one word that you used was confluence, and I love that word because I think it, really accurately sums up, the characteristic of fintech and its effect on people. So that's all we have for questions, everyone. Thank you so much for the questions. Now, Gerald, any last takeaways for the audience watching?
Okay, so I think you mentioned confluence earlier, and I think that is something that really reflects how fintech is a combination of finance and technology. It is driving the growth of a lot of related industries with a filter down effect. It is bringing together partnerships like between what we are having today, in that we are able to have this fruitful discussion that is being broadcast to a lot of individual investors who are keen to gain insights about different industries. So I think that is something that we hope all the audience today will be able to take away from and learn from the process. If you are keen to find out more, feel free to visit our website, beansprout.com, where we are bringing together different partners to be able to provide more insights to you.
CEO and founder from Beansprout, Gerald, everybody. Thank you so much, Gerald, for joining us today. And we look forward to the next show we have together.
Thanks, Olivia. Thank you. Thanks, everyone.
So for those watching, if you have any more questions for Gerald or the team, if you have anything about the app itself or even about Beansprout, remember you can still email us because our team is here for you. We're here to guide you and we're here to listen to all your concerns and possible questions that you have after this live show. So here is the email for you if you'd like to drop us a message, and even for any upcoming topics that you like to see. We always want to hear what you want to know about, and we'll find the experts to actually cover that topic for analysis. So please drop us an email and say hi. And we've got more live shows coming up, so much more. So you have to follow our social channels right here if you want to stay up to date with everything. And always leave a comment because I always read them. And I love getting some insights from what you have to say. And, it's always nice to hear from the Mumu fans out there in the community. So, as usual, our team will do our best to reply. But if you really want to join in and really keep up to date with all these live shows, you can find out more with the QR code right here. And as usual, these webinars are a chance to connect you, right? So this is a bridge. And I really, really hope that you took this opportunity to learn and to absorb the rich knowledge that we gained from our discussions from today. But as usual, I think it's important to also apply what you just learned. And so if you want to apply and start using what you've heard from Gerald's insights today, scan this QR code so that you can find out more in the Mumu app. And these are some of the products and features that you might want to explore, but I'll leave it to you if you want to take your investment knowledge further with this. Okay, our next show will be on Monday for show 2 for the FinTech month. So be sure to catch us with our next set of experts. I'm not going to tell you who they are. You're going to have to find out yourself. So you'll have to check out our next show on Monday. As usual, it is a pleasure to have you with us, and I'll see you on Monday. Signing off, I'm Olivia Higgins. Bye.